Hello and welcome to today's edition of Charting the Markets with me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar, we do obviously have US earnings seasons, which is ongoing. And then we do have some data in the form of weekly unemployment claims, that fully fed manufacturing index data, as well as existing home sales. Right, let's look at some charts and starting off with the US dollar. So the dollar basket has conformed to that long-term downtrend. We saw this reversal off that 200-day simple moving average, the blue line on our chart. We've trended low. We've broken through a few levels of support, reaching that 99.20 mark. Now, that dollar is looking oversold at current levels and has started to rebound from oversold territory. And so that moves us to the suggests that 100.50 might be the next upside target. So what we're doing here is we're waiting for a rebound from oversold territory to end before we look for new short positions. New short positions we consider on any bearish type reversals of one of our levels here, 100.50. Yeah, maybe looking at 101.85. When you start to change our trend bias, we start moving above that 200-day simple moving average, and that is still quite a long way away, sitting at about 102.70. Euro dollar, the picture is the inverse of that. We see that longer term uptrend is still in play, but we're looking overbought at this point in time. So we've traded through multiple levels of resistance, which is a short-term high of 1.1270. And we've had that marking the top, a bit of an indecision candle, that doji type candle. And we do look to be reversing off that level now, so implying some euro weakness, dollar strength. We're looking for a pullback. We're not looking at picking tops here. We're not looking at shorting tops. We're looking for a pullback towards 1.1065, that initial support target. And we look to see one of those pullbacks ending with a bullish price reversal. Obviously, this reversal is occurring from overbought territory. And so while we respect that longer term uptrend, we are waiting for weakness to play out before looking for new long positions into the currency pair. Picture of cable does look similar. Obviously, better than expected inflation data out of the UK has set that pound on a bit of a weakening trend, or a bit of a pullback rather. That longer term trend still remains up. So cable, the trend is still up, but we are retracing currently from overbought territory, and we've broken back below that 1.2965 level, and we are looking at 1.2750 as that next level of support. Our approach remains the same here. We're waiting for this pullback from overbought territory to end. Look for the price just to tick back when we suggest a bullish price reversal at one of our lower levels, provided we don't start trading below this 200-day simple moving average, again, this blue line on our chart. So we're waiting for this to end, just give us some sign that that pullback is ending, and that sign would be a bullish price reversal at one of our levels. We're going long again on cable. Looking at some US indices now, we have seen overnight, after hours, results from Netflix and Tesla weighing on US tech, or the NASDAQ 100, and obviously it goes through to the S&P 500. But looking at the NASDAQ 100 right now, we can see that we are overbought currently. That longer term trend is still clearly up, but that overbought signal suggests that we could be in the beginning stages of maybe a bit of a pullback or even a sideways consolidation. We'd be looking for that pullback to end at one of our lower support levels. Initial one being 15,300. I'd like to see the price just, once it's moved out of overbought territory, just ticking back, suggesting that that pullback is over, and looking for new long entries. And then from there, looking for a retest of a move, later on, about 16,000. So longer term target sitting at 16,000 on that NASDAQ, but we'd be looking for entry on a pullback to any one of these levels lower down. S&P 500, similar picture, but the sort of short-term weakness is not as pronounced. Longer-term trends still up right now. We've broken above that 4,510 mark, which was our target from our previous week after this bullish reversal of trendline support. But we've had this gravestone doji, that red candle there with that long upper wick. Follow through on that. I think we'd see, we want to look at lower close, just confirming that we are now seeing a pullback from overbought territory. Then we start looking at 4,510 being that initial downside support target initially. If we break below that, I think our next level is sitting at about 4,450. Approach is again not to pick the tops, but wait for weakness to play out, looking for that weakness to end with a bullish price reversal, a candlestick reversal. If we're looking at a line chart, just that price ticking back before targeting moves to upper levels of support, and that longer term upside target there being 4,630. When we look at the DAX, so moving over to Europe, we can see that we are sitting in a short to medium term range bound environment. That range bound environment is considered between levels 15,485 and 16,330. Last we looked, we were looking at this reversal from more or less oversold territory, and we're targeting a move back to 16,330. We do seem to be finding resistance before that level, and we're sitting at probably about that 16,200, so about 120 odd points short of that, and we are overbought at this point in time as well. So I think traders who are long might consider taking profit, exiting their positions, and maybe looking for any type of pullback towards support as a possible long entry opportunity again. And that's provided that this longer term trend is up, with the price trading firmly above that 200-day moving average. That trend bias starts to change if we do have a deeper pullback, no reversal, and start trading below about 15,400, that range support level, which coincides and provides a confluence with that 200-day simple moving average. FTSE 100, the picture is slightly different. So we have this longer term sideways trend that we consider it. We see the price whipsawing back and forth through that 200-day simple moving average, suggesting that the longer term trend is sideways rather than up or down at this point in time. Now, we had this false break of that 7,285 level, nice bullish reversal that's taking us through our resistance targets, through multiple resistance targets. We're sitting through that move after 7,560 does target 7,650 now. And while we are entering overbought territory, we haven't had an indication that we are starting to see a price reversal yet. But nonetheless, if you are long, you might want to start thinking about that overbought signal, and is it perhaps a suggestion that we should be looking at banking profits? On the short side, we'd be looking for any type of bearish reversal around the 7,650 to 7,700 level, in which case we would be looking for short entry, targeting move back towards that 7,560 initially, and then using that reversal high as a stop loss indication for that move. Now, reversal, if you do see the price ticking back, you want to see that accompanied by this overbought signal, or this moving back out of overbought territory, so back below that 80 level on the stochastic. I'm using just a simple default 14-period stochastic on the daily chart, as are all these charts daily charts. All right, let's look at some commodities. Now, Brent crude has given us an indication that longer term downtrend has been broken. Now, what we saw is this rebound from more or less from support, breaking a few levels of resistance, breaking above that 200-day simple moving average and above this 80-80 resistance level. I don't think that level is very relevant anymore, so I'm going to remove that from our chart. But we've had a break above, we had this bearish reversal, we had our first pullback from that sharp move higher. That pullback looks to have found support on what was previously resistance at 78.50 mark, and we have this bullish engulfing. So this is a suggestion that as a function of this move higher that we could be continuing right now. We don't think that there's a new long-term uptrend, but we do think that that long-term downtrend has been broken and that we are on a broad sideways consolidation. We'd have to move quite a lot higher before we think there's a new uptrend. But in terms of what we're seeing right now as a function of this leg higher, we've had our first pullback from the high. That pullback looks to have ended. Price will tick back. And so we're targeting a retest of that 81.60 level on Brent crude. If we are looking at, traders who are long might consider using a close below that 78.50 as a stop loss indication for that setup. Spot gold has also conformed quite nicely to our expectations. We had a bullish reversal off that 200-day simple moving average. We had a break of trendline resistance, and then we broke above that $1,945 per ounce mark, and continuing what we deemed as a longer term uptrend. We've reached our initial target here, 1,980, and we are testing that level right now. Through there, we get a close above that. Next level of resistance relatively close at $2,005 per ounce, but we are overbought at this point in time. So if you do have this upside breakout, discretion would be needed in where you put your stop loss, maybe trailing below a 1 or 2 day low, depending on your risk, your threshold for risk. Preference for me right now is to see a bit of a pullback, from overbought territory and look for new long entries into that pullback, maybe close to that 1945 mark. Last but not least, we have spot platinum. Similar to, ironically, that FTSE chart, the price has been whipsawing back and forth through that 200-day simple moving average. So the suggestion here has been that longer term trend is sideways for platinum. So we're looking at range trading off the levels, reversals off those levels. And what we have seen is that reversal off that 905 level take us through 940. And we have now reached that $980 per ounce mark. We actually exceeded that slightly. We had a close above. We actually had a break above, but that was quickly reversed with this bearish engulfing. So that big red candle just engulfing that, suggesting a bit of a pullback now. I think looking for new long entry, I'd like to do closer towards that $940 per ounce mark. Price pulling back, just seeing a tick back there as that initial level. There is also, the suggestion, if we are trading between levels, that this could be a short entry opportunity with that 940 being that initial target. From current, in that situation, you might look at having a stop loss on a close above that $995 per ounce mark. That's on spot platinum. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa, and thanks very much for watching.